Nanez. I'm doing good. How are you?
I'm great. Just wanted to sit down. It's nice to have you in the office again.
Yeah.
See your friendly face. And Steve and I just had a listing that came on, and now it's in contract. And we had buyers coming in, and it didn't seem like it's getting any slower right now.
No, yeah, for sure. It's definitely beginning of the year picked up, and then kind of traditionally, historically, we always see after Super Bowl weekend. You hear that a lot. Is when buyers really come back into the market, full force ahead,
Right.
And sellers too, right? Sometimes you see more listings come up after Super Bowl.
So how does that look on your end? How are your numbers in terms of compared to last year, maybe, of pre-approval applications?
Yeah, so I would say for me, personally, it's been comparable, very similar to last year. I haven't seen, for the beginning of the year, I haven't seen a whole lot more applications or a lot less. So gives me a feeling that 2025 might be similar to 2024. But I am hearing, we had the economist speaking earlier today, which for Home Services of America, stating that he does anticipate a little bit of an uptick in more sales in 2025.
Okay. Yeah, maybe that's just bringing more houses on the market or whatever people are deciding, right? Okay, nice.
Yeah, definitely expectation is more sellers will be listing this year. Other expectation is that interest rates, this has been been said for the last 3 years, so take it with a grain of salt. But according to the economist, he feels that interest rates will drop a little bit, but not significantly, and maybe in the right now they're roughly 7% ballpark. But that they might come down to 6.5, maybe even a little bit lower by the end of the year. So not significant, but still some positive.
Right, that's great. Thank you. And then, so I know we talked a little bit before we started the video about, from the time somebody gets pre-approved to the time that they're in contract. And you were telling me a little bit about, I can't make it. There's no trends right now, right?
Yeah, that's really all over the board. I mean, I've been doing loans for 22 years now. And it's kind of always been the same. I find that there's been buyers that can be in contract within a week. They just know what they want, and fortunately that property is on the market. They make an offer and it gets accepted within a week, right? Sometimes it happens that way. Sometimes there's 3 months, 6 months, even up to a year, because maybe they're looking at a very specific neighborhood, or they don't have that sense of urgency. So there's a whole bunch of reasons why it can take somebody longer. But to answer your question, it can be as quick as a week, as long as a year.
Right, and usually that pre-approval is only good for about 90 days, right?
Yeah, that's a good question. Yeah, so pre-approvals are actually good for 4 months.
4 months.
Yeah, so it's 4 months, and so we can just reactivate it by just getting updated documentation. So they don't have to go through the whole entire process again if the approval expires.
And what is a quick checklist of what documentation they should bring when I'm making the referral and other agents making a referral, or if they just happen to look you up and call you?
Yeah, pretty basic. So we ask for 2 years of tax returns, the 2 most recent years with their W-2s. Pay stubs for the last 30 days, and then their asset statements for the last 2 months, and then a copy of their ID. So 4 items realistically.
That's straightforward.
Pretty straightforward. Yeah. And then throughout the process, there may be more documentation that's needed down the road, but to get the pre-approvals process done, those are the basics.
So then I overheard you mentioned this earlier. Actually, I think you were doing a training while I was doing my marketing stuff. When there's 2 things that I wanted to ask about that. There's one I overheard about gift, so let's say parents are helping a child. What does that look like? When should the money be in there? How should it be wired over? What's the process? Should it go straight to title? Should it go to the lender? Where should it go?
Those are great questions. So there's a number of ways to do it. There's really not so much a wrong way, but the easier way is, and we recommend it a lot, is to do it send the gift funds to the title company before closing. And the reason, it just makes it a little less items for that buyer to have to bring to you. So the reason for that is basically a gift. If, let's say, a mom and dad are gifting the daughter a $50,000 gift to purchase the house, we have to get a gift letter, and then we have to verify that the money's been received that it's been transferred out of the parent's account.
Got it.
So by sending it directly to the title company, that kills two birds with one stone, right? Because the title company can verify, yes, we've received it. They give us a wire receipt, and on there it shows the parents are the ones who transferred it, so that kills the two birds with one stone. If they do it in advance and just send it to the daughter's bank account, now she has to print her bank statement showing she's received the funds. The parents have to show us that they've taken out the funds, so it's just a couple extra steps. So for, to make things easier, sending it to the title company is a little bit easier.
All right, and then the other thing I overheard was, let's say somebody sells a bunch of stock the month before they buy, and they get a huge lump sum, $200,000 that they're going to use in the purchase. What is that called, and then what kind of things do somebody that's in that case have to kind of look for? What kind of maybe problems does it call, or solutions that we have up front?
Yeah, if it's stocks, no problem at all. People use stocks all the time. It's very easy to paper trail. So that's really, we have to source and verify the liquidation of those stocks, and that's pretty much it. And so typically they can give us the statement showing that they withdrew the fund, that money from their stock account, from their brokerage account. If the statement's not available yet because it's very recent, we can get even a printout, or sometimes they just get kind of a receipt letter. So it's completely acceptable, not usually an issue, just an extra document that they need to provide.
And if that happens to be, so like same thing, if somebody's a 1099 contractor for somewhere and they get a bonus because they completed or had a huge sale and they had another big increase in deposits, it would be traceable through that.
That one's a little bit different. Yeah, that's actually very different because a 1099 person is considered a self-employed person. Yeah. Now, so if they're 1099 and they receive a big check, that check gets deposited into their business account. We do have to verify where those funds came from.
Got it.
And then it's typically, they can use it as long as we verify that it was from, their job and they're the sole owner of the business. There's a few extra steps when for self-employed buyers. Definitely a different process. Yeah.
And then what is the term that you're using in terms of an amount that was deposited early that we're not sure where it came from, at least from the lending side? What is that?
Or seasoned, I'm sorry.
Seasoned,
seasoned. Yeah, so seasoning. So all assets, and like I said earlier, one of the items that we ask clients, buyers to bring in to get pre-approved is 2 months of statements, right? And so the reason is we want to make sure we have to per guidelines, find out that this person has had these funds for at least 2 months. So that's why we ask for 2 months, and that's called the funds are being they're seasoned, right? If they just deposited, like in the case you mentioned where a contractor just got $50,000 check from one of his jobs and they deposited $50,000, that's not seasoned, so we do have to verify. And sometimes funds are not seasoned. Let's say somebody sells a car that they deposited, it's not considered seasoned, so we have to verify where the money came from if we want to use it for this transaction. If we can't verify where it came from because there's just no paper trail, then we don't deny the loan, but we just say we can't use that $20,000 from your car sale because you have no documentation to prove where it came from.
Got it.
So,
all right, well, thank you, Sylvia. I really appreciate it.
A lot of information.
It's great.
Great questions.
Good little talk.